Alright, so in this video, we're just going to go for a deeper dive into yesterday's session. This would be on the 12th of October, which would be the Thursday. So for me, there was no trades taken here, unfortunately, so I missed a potential long opportunity, but we'll go through it in my thought process as we're kind of going through it. So this candle here at 8:30, that's just CPI news, and CPI news pushed price down. Now, where it pushed price down to, if you go into the 1 hour time frame, we actually pushed price down into a fair value gap initially, right? So if you have a bit of a look here, this is the CPI candle, right, roughly about here. We push price down into this fair value gap. So I'm going to mark that out. I'll get rid of this, but it becomes important later. So we come back into that fair value gap on the 1 hour, then going back to the 1 minute. Once we come back into that fair value gap, we find some kind of support there. So my idea, what I was hoping for, was that we'd potentially take out this sell side liquidity. We'd take out this point. So we'd sweep that sell side liquidity, and then we'd shift to the upside, and then obviously move higher. So instead, what happened is market open, as you can see, very similar to NFP news last week. We have all this, mucking around, this accumulation. We technically sweep this swing low here, which is internal sell side liquidity. So that's one thing that you can note down. So we sweep this internal liquidity here, sell side liquidity, and then we get all this accumulation. Now, I had my eyes on this fair value gap, right? This bullish fair value gap, and I'm going to extend that out in time. Now, what I was hoping for was a bit more of a clear market structure shift to the upside. So you can see we did come up a little bit. We created a bullish gap, but we disrespected it here. So for me, there was no play at that point. We then come up again, but look how we actually used that fair value gap for the second time. And this would have been the entry to take a long position, because after this, there would be no other entry to take it up. Stop loss below these lows. Take profit, even at that high, you've got a 1 to 3.8. But if you rode it to, this fair value gap here, for example, this bearish gap here, you could have taken some partials or some profits there too. Or even, at the top of this candle here, you can see, there's quite a nice risk to reward there on that particular trade. What I was looking for this trade is, once we pushed up here, for me, that made it clear that we're going higher. And I was looking for a return to this fair value gap. But this was treated as a breakaway gap. So we unfortunately didn't actually get an entry yesterday, because I was hoping to get an entry off this fair value gap here, placing my stop loss below these lows or these bodies, and then targeting the top of this, or whatever 1 to 2 was. That's what I was going to target. So I missed that opportunity. And then what you see is we do take out all these accumulation from around the London session period and heading into New York. Then we take out this internal swing high. So it was very choppy. You take out that swing high there, you might class this as a market structure shift. And then technically you return to this fair value gap here, which is supported by a order block. So these 3 candles in green. The only thing with this short trade that I didn't really like was that if you entered here, you could place your stop midpoint, or I guess consequent encroachment meeting threshold of that order block. You could do that. But if you had your stop loss above these highs, you could have secured a scalp like a 1 to 1, even like with your stop loss here. You may not have reached a 1 to 2, or you may not have reached your target. So you can see what happens. Say you entered here, you come down, my stop loss would have been moved to break even, because I would have hit 1 to 1, then I would have got stopped back out again. And you can see we do bounce off that point for quite some time before breaking again to the upside. So then we actually break again to the upside, and we take out this swing high, relative equal highs. So we take that out. Then we kind of have a shift again here. There's a fair value gap, and it's really a bit of trickery last night in terms of what the market was doing, because when we do return to that fair value gap, then we come down a little bit, but then we shoot past it again. So we shoot past that fair value gap, we take out more, internal buy side liquidity, as you can see. And then we kind of chop around for a bit. You can see here, this fair value gap, we'll talk about this. That's interesting. And then also this one, which doesn't get traded into, and you can see, I think it's about 1 o'clock. Yeah, we just have a massive sell-off. So all that liquidity, because that's generating liquidity now, all this liquidity, it's called phantom liquidity or trendline liquidity. All that liquidity at 1 o'clock is taken advantage of or rated. And then where we close, if we extend this fair value gap out, this is the 1 hour fair value gap, we kind of close near that area. So in terms of where we opened for 9:30, we opened here, we rallied up a bit, we came down and we closed here. So a very interesting kind of situation in the PM session, really. Like, look, there's not that much going on. We come down, we come up, there's no entry off the fair value gap down here, so no optimal trade entry, and then we just muck around for the rest of the session. So overall, it was a pretty choppy day. I know a couple people took this position here, and in hindsight, this would have been the best play to take. Either off this fair value gap. Now, with this fair value gap here, depends where your stop loss was, depends on your spread as well. I mean, it came within a couple ticks, but you may not have got stopped out. But if you put your stop loss below the bodies, then yeah, 100%. And then I guess some people could have entered from this second return, like that. So you can see how that bullish fair value gap, if we zoom in, price actually used that twice. So disrespected it, which for me, I don't like to see, but then it came back up again and then returned to this bullish gap twice. This was the second return here. So this could have, if like say you got stopped out at break even when it came back down or whatever it was, you could have used this as a second potential entry to enter off with the idea that we're going to take this higher. So for me, no trading on this one. I missed out on the opportunity. And then as I was watching price, I didn't really like anything that I saw here. Like, this looked okay initially, but then what I noticed is if you extend this out in time, this bullish fair value gap that I mentioned originally that I was going to enter from, we actually just tap into it. So again, the market was playing both sides. If you took a long position, say from here, and you put your stop loss below that fair value gap candle, then yes, you would have secured a nice 1 to 2 back into that gap. But for me, this would have been the only valid trade. I wouldn't say it was a very clear setup. Nothing that I really wanted to risk on. And then you can see what happens here. We generate all this liquidity, and then we just come down. So I hope this kind of helps. Some days the markets are going to be like this and you're going to miss opportunities. And I have a couple people who entered in this fair value gap. Price came up, right, and they hit 1 to 1. So they entered in this fair value gap, for example. Stop loss below the low. Price came up at these highs, which means they hit their 1 to 1 target, and then they move their stop to break even. And then when they do that, when price came back down again, they got stopped out, and then pretty much the next couple minutes after that runs to the take profit target. So very interesting how it works. Often the CPI news, and this happens with NFP too, I've noticed it from the last couple sessions too. You got a massive drop down, we take out liquidity, we tap into a 60-minute or 1 hour fair value gap. A lot of the time this will be refilled, not always, but we've been fairly bullish the last couple of days on NASDAQ, so it's been pretty interesting. So yeah, just a couple potential trades there that could have been taken. Again, this is still in the silver bullet, but it's a lot of chopping around. This in the silver bullet, this one here, that would have been your entry. So yeah,